We're going to bring in Roger Ferguson to this conversation right now, former Federal Reserve Vice Chair, CNBC contributor. Your first reaction to these numbers and perhaps the way you think both the White House could react, since that's now a sort of new component to this, but then also how Jay Powell may react.
So, look, I think these numbers are a bit of a relief, and as the panel has been saying, in that they reflect a certain kind of normality. A little bit of softness perhaps on some of the unemployment numbers, but I think nothing to worry about. I think the White House, if they were wise, would say, the unemployment rate's still roughly at full employment. The numbers don't look like they're feeding into inflation, so a check for them. I think from Jay Powell, a little bit of the same. Worried about the economy softening. This doesn't necessarily suggest that just yet, but nor does it suggest that the average hourly earnings are going to be driving inflation. So I think for everybody, this is a, so far so good relief kind of number, but much more to come given the kinds of uncertainties and policy moves that we're waiting to see.
Well, that's what I wanted to ask you, Roger, though, which is the uncertainties that Steve Leisman was just reflecting. When you start to think about what were the kinds of numbers you think we'll see next month and the month after, what does that portend?
Look, I think we're definitely going to see a higher unemployment rate. I think obviously the federal job numbers is going to go down, which will have some impact on government numbers overall. But I think this has got to be one of many numbers to look at because the labor force out of Washington, D.C., as somebody pointed out, is not really the thing that drives the economy. I think there are much bigger issues. So this number will be one that feeds into the broader context of is the economy slowing? There's some concern in the Beige Book of that. We see some risk of inflation expectations getting higher. So I think right now we're on the precipice of trying to decide which way all of this is going. Hopefully better growth and lower inflation, but not yet certain. And obviously some of the things that the administration might do could exacerbate both sides of that question. We could have higher inflation from tariffs, and at the same time have tariffs slow down critical sectors. So I think at this stage it's a wait and see, and it will unfold, and now I think we'll resolve some of the kerfuffle that you just had on the panel.
Let me throw one other ingredient into that stew, which is at some point we're going to have a big debate in this country over taxes. I imagine it may even start before the summer in earnest. How does that relate to the uncertainty that you're describing?
Look, I think it plays into the big fiscal question. So, a lot of focus on getting our fiscal house in order. I think what they're going to discover is it's hard to do that with just one side of the equation. I think it's going to be hard to get the fiscal house in order focusing just on current expenditures. We are going to have to think about new revenue. I don't think tariffs are going to generate as much revenue as the Trump administration hopes. And so I think taxes on corporations and individuals are definitely going to have to be on the table more than the administration wants to admit in order to get the fiscal balance. Not consistent with their headline message, but I think the reality is going to eventually confront everyone that we can't leave taxes off the table and think that we're going to cut the federal government and raise tariffs enough to deal with the imbalances that we've had.